Oh man, CPI inflation is bad. Negative reading on the US CPI inflation. Bitcoin tumbling to the downside, 94,000 at the time of recording. This ain't gonna be good, guys. Emergency video. I'm here to update you on exactly what's going on and what this could mean for the crypto prices. If you like these type of updates, smash all the likes. Do not forget to subscribe. Can't even got the words out here. The inflation figures are that bad. Let's start off here with the headline inflation figure, guys. Came in at 3%. Market was expecting 2.9. This is not good, guys. This is not good because it means inflation is sticky. Remember in the previous times we spoke about during the rate cutting cycle about the Volcker time and other previous times where inflation, the back hadn't been broke of inflation? Well, it felt like we got there, right? Look at this chart. We were coming down 3.5, coming down, soft landing. Now, hopefully, this is a dead cat bounce, right? Just like we know in TA, hopefully, this is just a dead cat bounce and we curl over. We start seeing 2.9, 2.8, and this high is lower than this high. We're doing TA on the inflation figures. But that's what we need to see. We cannot risk this going back up to 3.5, God forbid 3.6. If that happens, we're in trouble. We're in trouble. Remember, the thesis of why I'm excited about this market, even though a lot of people are starting to feel a little bit nervous, was that we're still entering a rate cutting cycle, that we managed to land. Everybody was celebrating this soft landing from Jerome Powell. I was even listening to the Senate banking conference yesterday where Jerome Powell was giving his testimony. People was giving him props for a soft landing, and he was feeling confident as well that, inflation was coming closer and closer to our 2% goal. Back at 3%, guys. The expectation was 2.9. The market knew it would be kind of high, and they thought it would be 2.9 like the last month in December, but 3%, that's high. But now it gets a little bit worse, because if we take a look at the month-over-month figure, that came in at 0.5 versus consensus of 0.3. Now, that might sound like a little bit, but 0.3% annualized is 3.6%. 0.5 annualized, you're running closer to a 6% inflation figure. Right? That's a problem. 6% annualized inflation. This is the highest month-over-month figure we've had all year, right? In a full year since January 2024. And if I go a bit longer, the last time we got 0.5 month-over-month was August 2023. It's not a good read, guys. Now, some people will make the argument that, there's some excitement in the economy post-Trump. People are spending more, they're hiring more, there's more growth in the economy, people are feeling a bit more prosperous. Maybe that's leading to some of the inflation. But really, the argument is probably around some of the tariffs. Now, is it too early to see some of the impact of the tariffs? Remember, this is the January reading. Yeah, you can make this argument. It's going to be so exciting to see the February reading of what happens in this market, right? That's what we're going to want to look for, is what happens in February. So let's now take a look at this, guys. Let's now look at the core inflation, which takes out food and energy. The forecast was 3.1. It came in at 3.3. Again, high. Back to Q4 figures from last year. Not crazy high where it means we're super worried that it's 3.6, but it's a bounce, right? It's not coming lower and lower. It's bouncing back up again. And that's what's going to spark the fears. Looking at the core inflation month over month, which is the same as what we just did for the headline, expected to come in at 0.3, which is 3.6% annualized. It came in at 0.4, which is that 4.8 figure annualized. Again, the highest we've seen since March of 2024. CPI is hot. There's no two ways about it. Markets will be a little bit worried about this. I mean, it's too early for this fear and greed index to update, but you can see the crypto market is not happy. You can see the stock market on the pre-market. It's not good. Dow Jones futures tumbling 400 points. The Nasdaq is lower. The S&P lost 1%. I mean, initially Bitcoin was up on the day, right? We went as high today as 96.5. Now we're at 94.5, and the chances are we're going to go test back down at 92, 92.6. It's not a good reading. Remember, we wanted to see good data coming out which could give us a clue or, give us some hope that we would get a rate cut sooner rather than later. Now, the markets were pricing this in around that June time. We saw that they started moving that pricing into July. Are they going to now, with this new data, start to kick this down the line to say we're not going to get our first rate cut until September? And who knows, if bad data like this continues, it's the whole year gone without us cutting. So almost what market participants are starting to price in is like a lost year, right? 2025 was this year where we thought, we're going to get a rate cut, and onwards and upwards we'd go. It'd be an exciting year because remember, we thought we might get lucky enough to get a couple of rate cuts at the end of last year, but we didn't get it. We were like, definitely we're going to get it this year. And then in December, when we got the summary of economic projections, the Fed said, we're only going to get 2 next year. That's when the market got upset. and that we've been upset ever since. And now we got more data to suggest that maybe Jerome Powell was right. Maybe this inflation is still a bit sticky and there's work to do. There's a reason these rates need to be higher for longer. Now, God forbid if we get a rate hike, if inflation continues to come in high and higher and higher and higher, and we get a rate hike, that's not good. Let's now take a look at what investing.com had to say here. US consumer price rose by 3% in January, faster than anticipated. US consumer prices rose. This is all what we covered, right? So to come back here into crypto, it's not a good time. You gotta be careful here, because the next major support, like we know, comes in at 92. If I bring out the daily EMA ribbon, you can see now it looks like we just got rejected. We're working our way really hard to try and get it back. Now we're getting rejected. That means the ribbon will start to flippen, where these lighter color lines will start to cross over these darker color lines, and the bears are going to get stronger. If I zoom out to the weekly chart, you can see the number I've been calling for is the top of the EMA ribbon is at 88, and really down to the previous all-time high before we broke it, around that 74,000 mark. I continue to maintain that a pullback to that 74 is likely. Anybody who doesn't think that's likely, you need to look at the data, right? It's very likely we can go down to 74. If we do, incidentally, around this level, I want to be buying the dip. Remember, it's a pullback into the EMA ribbon. I'll feel comfortable taking that dip. But there's another thing I need to make you aware of. This is a big, nasty looking... let me get my brush out. Here it is up here. It's a big, nasty looking M pattern, right? It's a double top. However you want to look at it, we ran up, we got rejected there. Then we ran up again, we got rejected there. That's a double top pattern. If you've taken my TA course, or even if you haven't, you probably know this. It's a reversal pattern. It's a sign of reversal in the market. And we got to start facing the music, right? It'd be silly for us to not prepare for this scenario, because this scenario requires work. It requires us having conviction. It requires us having a game plan to say, what am I going to do? What am I going to buy the dip on? Am I going to panic sell? Whereas if we just go up, great, go for it, right? There's nothing to do. If we're going to go up, everything's exciting, everything's easy, everybody knows what to do when the market's green, but we should prepare ourselves for this here to the downside. And that requires me having some cash on the sidelines, knowing what I want to do. Do I want to DCA? Making sure I don't panic sell, right? This is exactly where institutions will want to step in and buy the dip around the previous all-time high, because that's easy money for them. I mean, if you take the measured move from as high as we got, let's just see if I can get that measured move from as high as we got down to previous all-time highs, a 32% pullback. They're going to love buying Bitcoin at a 32% pullback, right? But I'm not letting them buy mine. So, negative inflation reading. Are you worried about this? Let me know in the comments below. Fact is, inflation is hot. It's hot. We're not getting a rate cut. Forget about it. We got to hope we don't get a rate hike at this rate, right? Now, we will look to other data, the jobs data, other retail sales. But at the moment, it's all coming in hot. No chance of rate cuts, no chance of liquidity just yet. In fact, maybe the other way. Hope you guys enjoyed this video. If you like this type of content, smash up the likes. Don't forget to subscribe. Got another interesting video coming for you later on today, hopefully. So make sure you stay tuned with the notification bell on. If you actively want to trade with me, check out the link in the description to BitGet, where you're going to get 50% off of your spot grid fees. Check that out. Also check out BITUNIX, who are giving out free money. So even if you don't deposit, they're giving you some free cash. So take advantage of that. Link is in the description. Thanks for watching, and I'll see you in the next one.